Hi everyone, hope you're doing well. So this will be the longer video and just kind of on, whether it's worth considering using a particular bank for mortgage that you're also a member of. As always, if you're liking the content, please like, subscribe, and comment, and I'll take a look at those and consider turning on the notifications as well so you don't miss any videos coming out. Right, so we'll get started. So, I've just had a look at Lloyd's, and I'm sure other banks do similar schemes in the UK. But effectively, if you're a member, they'll give you like preferential rates on their um, mortgage rates. And they actually give quite good examples of this on the website. So the examples it gives is like a 25-year mortgage, starting at a five-year fixed rate. So you get a discount of that of 0.2%. And it's obviously it's still quite high at the moment, 6.5%. Obviously the base rate did drop from 5.25 to 5% recently, but obviously that'll take time to kind of impact all of the rates that you'd get from banks on mortgages, etc. If you're already on a fixed mortgage for a period of time, also you're fixed to that level. So yeah, so anyway, so you've got that kind of drop, but yeah, the base rate therefore has dropped, 0.25%. But say by being a member, you're getting 0.1/5%, 0.2% off. And how that kind of works out is for £162,000 mortgage, you're saving something like £21 a month. And it's not a massive amount of money, but also you could use it towards either essentials or saving. You could get 5% on it easily in an easy access account. You could get historically 10% on it if you invest it. Obviously, they're not guaranteed rates and those are all variable, but you could make that money do something for you. You could even use it as an overpayment on the mortgage. And while it's not a massive amount, £250 or what have you in a year off the mortgage, or the interest potentially, or the mortgage is still something. But what you've got to keep in mind, I suppose, it would always be best if looking for mortgages to get various quotes for them and just go for the lowest one that kind of matches your circumstances. So if your kind of income is quite stable over the next 5 years, what have you, in permanent contract, and you know what you're going to get or what kind of your promotion structure is, etc. You could maybe just get something fixed, so then know what you're going to be paying. But I suppose if you've got a variable income, or if you think that rates are going to drop, obviously you could maybe get a variable rate. But as always, not financial advice, but just kind of an idea of, like with many things that we pay for, it's always best to compare, the different rates that you can pay for things. So whether that's travel insurance, whether that's internet provider, car insurance, utilities, mortgages, the actual bank account itself, it's always worth just comparing at least several, before you go ahead with them. And also, if you want expert advice, to also seek that. But yeah, so just moving on. So it is worth looking at kind of the discounts you'll get from being with the bank, because like with this one in particular, you've got several, I suppose, benefits all kind of rolled into one. So if you're with them for your bank, also you get this preferential mortgage rate, which, for example, £21 a month, for example, could be saving. If you're having your wages paid in there's actually no account fees, on certain ones as well, certain accounts with Lloyd's. So you're not paying any extra for it. You get things like free cinema tickets, free magazine subscriptions, or whatever you pick there, which is, will have a value, whatever it's £60 or something value, whatever that is. And then it also gives you access to things like, relatively good fixed rate ISA rates, which obviously are different to the variable ISA rates that you can get with, places like CHIP, 212, as well as many other providers. From when I've checked, they're not the best rates of ISA, but also if you want less hassle and just want one account, obviously it can be good for that type of thing. So you can get that, you can get a cash ISA there. You can do investments. I've personally not done them with Lloyd's. And you can also get things like a regular savings account that have quite good interest rates. Like previously, I've got ones at 6.25%, 5.25% fairly easily. They're a bit more restrictive, as I mentioned in other videos, which I'll point to up here. But in general, if you want like a package of benefits, I suppose, high rates on regular saving, it might be worth considering something like that. Yeah, and then if you're just thinking kind of, yeah, what's the best thing to do with money? So whether it's this £21 I've mentioned, or other money that you're saving, or what have you, like what's kind of the best use of it? I suppose in a very simplistic calculation, it would probably be to use it to pay off what's the highest interest debt that you have, like assuming that you are in debt, mortgages included, or car loans or what have you. So if you've got a credit card that you're paying 30% APR interest on, that would probably be what you'd want to pay off first. And then, for example, if you do pay that off over time, potentially look at paying off, if your car loan is at a higher interest rate, 10%, for example, compared to your mortgage that's 6.5%, then you might want to pay off the car finance prior to paying off the mortgage. And there's probably like psychological benefits of, if you do actually pay something off, obviously, yes, you've got less money going out per month once it's paid off. And just, once you've completed, say, paid off your credit card, then moving on to, then you're going to pay off your car or something else that you financed. It could be equipment, it could be PC, it could be anything. But just, and then, in reality, a lot of people are going to struggle to pay off their mortgage particularly early. But, if you can pay extra towards paying off your mortgage, it'd probably be worth doing. Just be aware that sometimes there are limits or charges on how much you can overpay per month or per year. So just have a look into that before you maybe look into the overpayment route. But paying off a mortgage, for example, if you're paying 6.5%, is probably beneficial to just holding it in a cash account where it's going to get 5%. But potentially, if the market you think is going to get you 10%, like historically, the S&P 500 has got 10% over the last 90 years or so. Potentially it'd be better in there than paying off a mortgage early, but obviously that would vary with maybe your circumstances, how much money you've got, and how the market's performing in that particular year. So obviously this year it's done particularly well since last year, even with the recent drops in August. But yeah, so just something to have a look at is kind of, what rates you can get, whether it's beneficial to go with your bank. It may not be, it may be better still to just use comparison sites and go for the lowest ones. And obviously they seem relatively high at the moment, so it's whether you want to consider going for a tracker one. But obviously the risk always is that the interest rates go back up, even though they've come down now. So just something to consider. Hopefully that will help, and let me know if anything else.